How do you get exposure to the commodities rally? Do you do it directly through assets like oil or say through energy companies?
Well, I think the best way if you want to benefit from any uncertainty, particularly on the supply side, you go directly. There is exposure you can take through some of the broader indices, CMCI, Bloomberg. I think that's the most effective one. And for those who maybe don't follow the commodity space on a daily basis, a broad exposure is highly warranted because there is also a lot of upside in commodity, not just energy, as you mentioned.
We saw a little bit of pressure for aluminum and copper, as I just showed earlier, but you're still favoring the metals. Why?
Well, first of all, global growth should still be above trend, and historically that has been a good environment for industrial metals. Second, we do have some structural trends we all know about. Decarbonization gives copper demand an extraordinary outlook, and we think the market is going to be undersupplied. We're going to miss probably 500,000 tons of copper in terms of deficit this and next year. Now, that might be small in percentage term when you look at versus global demand, but it's sufficient to really dry up further some of these inventories at visible exchanges. As for aluminum, as you talked about, well, here we see a shortfall of almost 2 million tons throughout this year and next year. And I think that just aggravates the situation that prices need to go higher.
How do you play that volatility?
Well, two things. I mean, if you have the right risk appetite, you obviously can go directionally, just long copper and alloy, or you can look for a broader sector index. I think that's one way to play it. And if you have maybe a little bit more of a cautious posture, if you think the global growth is heading towards a plateau and at one point it should level off, you might sell volatility. Now, vol has gone up in copper and aluminum, and I think if you, for example, sell a put or you sell volatility below in aluminum below $3,000 a ton, for example, 6 months tenor, you get decent yields actually. So selling downside risk is one way to actually benefit from a very positive outlook.
We're clearly seeing haven demand coming out of these nearer term concerns over the Russia-Ukraine situation. But beyond that, what trades are you favouring when it comes to FX at the moment?
Well, clearly, the Ukraine-Russian tension is something that is going to affect the market in the near term. But I think what we like to focus on the rate hike trajectory that we have seen in the US. I mean, there's a lot priced in, but I think if you look at the FX market, that doesn't fully reflect where the dollar is trading. So as these rate hikes come in, I would expect the dollar still trade on the firmer side. So we want to be long dollar Swissy, for example, looking at 0.96, thereabout, 97 at some points as the yield gap widens. I think the Swiss franc will be under pressure versus the dollar. If you think about on a relative scale in the crosses, I do like, if you think commodities are high and what asset has really not followed the commodity trajectory is really the Aussie. I mean, there has been an RBA which has been quite on the dovish side, but when they shift, there is upside of 5 to 10% in the Aussie over a 12 to 24 months. So I want to be long Aussie against the euro. It also hedges me a little bit against the uncertainty in Europe. And if you look for a more better hedge, just be short euro, long yen as a hedge against uncertainty between Russia and Ukraine.